Welcome to our comprehensive research on Roblox. Today, we're diving deep into what we're calling Roblox Leveling Up. This is our FY 2025 Equity Research and Financial Analysis for RBLX.
Our mission status? Significant upside. We believe the viral breakthrough has been confirmed. Here's what the numbers tell us. Our base case price target, $100 per share. That represents a 36% upside from current levels. For 2025, we're projecting revenue of $5.02 billion, up 39% year over year. Free cash flow, $1.28 billion, up a staggering 99% year over year. And bookings are absolutely crushing expectations at $6.88 billion, beating forecast by 57%. Our analyst insight is clear. Roblox has achieved viral breakthrough status. The explosion of user growth in Q4 2025, driven by mega hits like Steal a Brainrot, has permanently altered the cash flow trajectory of this business. To understand Roblox, you need to understand the platform engine. Think of it as a flywheel with 4 critical gears. First, creation. Developers build experiences using Roblox's tools. Second, engagement. Users play these games and experiences. Third, monetization. Players spend Robux, Roblox's virtual currency. And fourth, reinvestment. Those revenues flow back to creators through DevEx payouts. Now here's the critical context most investors miss: the revenue lag. At point A, bookings happen. Cash is collected instantly when users buy Robux. But at point B, revenue is recognized over 27 months as that Robux gets spent. This creates what we call a gap loss illusion during high growth phases. The accounting masks the true cash generation happening in real time. Keep this in mind as we walk through the story. Let's start at level 1, the foundation years, 2020 through 2023. We call these the build mode years, when Roblox was investing heavily in infrastructure. Look at this visualization. In 2022, free cash flow was negative $58 million. By 2023, it turned positive at $124 million. But beneath the surface, Roblox was spending 34% of revenue on R&D, and operating losses hit $880 million in 2023 alone. Here's the key takeaway. These losses were the necessary cost of construction. Roblox built the servers, the safety tools, and the physics engines so the community could eventually build the hits. The foundation was being laid. Level 2, the inflection point. Fiscal year 2024. This is where we see the J-curve of profitability beginning to materialize. Free cash flow margin jumped to 17.8%. Daily active users hit 82.9 million, and adjusted EBITDA flipped positive to $180 million. But the real story is right here, in the free cash flow trajectory. 2024 delivered $641 million in free cash flow, up an incredible 417%. Our analyst note captures the essence. Management demonstrated discipline. They reduced capital expenditures by 44% while growing users by 18%. The machine began to run efficiently. And now we arrive at level 3, viral velocity, fiscal year 2025. This is the non-linear explosion driven by hits. Bookings reached $6.88 billion, up 57% year over year, absolutely crushing the 24% forecast. Daily active users peaked at 144 million in Q4, up 74% year over year. Concurrent users hit a peak of 45 million. What's the catalyst? Viral experiences like Steal a Brainrot, which drew 25.4 million concurrent players, and Grow a Garden, which drew unprecedented traffic. These moments prove the platform's ability to host global cultural phenomena. This is the viral velocity phase. Let's zoom out to the global picture. We're seeing explosive growth in the Asia-Pacific region. Total average DAUs have reached approximately 130 million globally. International DAU growth is up 79%, and APAC bookings are up 96% year over year. Look at the specific markets. Indonesia, up 700%. India, up 160%. The Philippines, up 110%. These aren't just numbers, these represent millions of new players entering the Roblox ecosystem, many of them in high-growth, young demographic markets. This is the global expansion pack unlocking. But growth is only half the equation. The other half, monetization. Let's talk about converting users to payers. Monthly unique payers grew from 18.9 million in Q4 2025 to 36.7 million in Q4 2025. That's more than a 2x increase. Bookings per pair are up 6.2%, now at $258 per pair, and payer penetration sits at 3.4% of the user base. Here's the demographic aging effect at work. Users aged 13 and over represent 2/3 of total DAUs. The 18-plus cohort is growing over 50% annually, and they're spending 40% more than younger users. As the platform matures, the user base is aging up, and older users convert to payers at higher rates and spend more. This is a powerful tailwind. Now let's talk about Roblox's ultimate moat, the creator economy. In 2025, Roblox paid out $1.5 billion to developers. That's up 68% year over year. The top 1,000 creators are now earning an average of $1.3 million each, up 50%. The DevX rate increased by 8.5% in September 2025, meaning creators are earning more for every Robux. And here's the kicker, 29.9% of revenue flows back to creators. Roblox's tagline says it all. We don't make the games. We fuel the economy that makes them. This creator flywheel is the economic moat that keeps content flowing and users engaged. Let's clear up the profitability picture, because this is where many investors get confused. You see GAAP net loss at $1.198 billion, and you might think Roblox is hemorrhaging cash. But look closer. Revenue in 2025, $5.02 billion, up 35%. Gross margin, a healthy 78.5%. Adjusted EBITDA, $464 million, now positive and expanding due to operating leverage. Here's the note you need to remember. The GAAP loss is largely an accounting artifact due to deferred revenue mechanics. It does not reflect the cash reality of the business. The real profitability story is in adjusted EBITDA and free cash flow. Speaking of cash flow, let's talk about why Roblox is the cash flow king. Free cash flow has gone from $124 million in 2023 to $641 million in 2024 to a projected $1.28 billion in 2025. That's a 99% year-over-year increase. Operating cash flow in 2025, $1.8 billion, up 118%. Capital expenditures are controlled at just $300 million, a disciplined level of investment, and the free cash flow margin now stands at 25.4% of revenue. This trajectory, this inflection, this is the story. Roblox is generating serious cash. Before we move to risks, let's do an inventory check on the balance sheet. Think of it as the fortress. Total liquidity, cash plus investments, $5.5 billion. Net cash position, $4.5 billion, trending upward. Debt is flat at $1 billion. This war chest provides strategic flexibility. It supports AI infrastructure investment, it enables potential M&A opportunities, and it provides economic resilience during downturns. Roblox is not just generating cash, it's building a fortress balance sheet. Of course, no investment thesis is complete without addressing the risks. We call these the boss battles, the obstacles to the next level. Risk number 1, safety and regulation. Child safety is the number one concern. Roblox's age verification rollout has achieved 45% penetration, which is critical to mitigate regulatory pressure, but this remains an ongoing challenge. Risk number 2, viral dependency. 2025 was driven by unpredictable hits. Can this volatility be managed? Management is shifting to quarterly guidance to help smooth expectations. Risk number 3, competition. Well-funded rivals like Fortnite from Epic Games and Minecraft continue to compete for user time. Roblox must continue to innovate to maintain its edge. These are the boss battles ahead. So what's the next level? Let's look at 2026 guidance and strategy. Bookings are projected between $8.28 billion and $8.55 billion, representing 22 to 26% growth. Free cash flow is expected between $1.6 billion and $1.82 billion. On the strategy front, there are 3 major initiatives. First, AI infrastructure. Roblox is targeting 10x efficiency gains for content generation using AI tools. Second, native GPU infrastructure. They're migrating compute from cloud to owned infrastructure to improve margins and performance. Third, new genres. RPG, racing, and competitive gaming experiences are being prioritized to broaden the content mix. The platform is evolving, scaling, and leveling up. And now, the final verdict. Our price target, $100 per share. That's a range of $88 to $117 depending on scenario. Our valuation logic is based on 3 pillars. First, methodology. We're using discounted cash flow and an EV to revenue multiple, targeting a 10 to 13x multiple. Second, market share. Roblox is on a path to capture 10% of the global gaming market. Third, cash flow. Free cash flow is doubling annually and creating substantial shareholder value. Our conclusion? Roblox has successfully leveled up from a speculative growth stock to a cash-generating platform juggernaut. The flywheel is spinning, the viral fits are proven, the creator economy is thriving, and the balance sheet is fortress strong.
Thank you for watching. If you found this analysis valuable, please subscribe to our YouTube channel or follow us on Instagram for more in-depth equity research, financial deep dives, and investment ideas. Until next time.
Remember, this analysis is for educational purposes only and shouldn't be taken as financial advice. Do your own research and, if needed, consult a qualified financial advisor before making any trading decisions.